Okay, Sharon, it's just now, just after 11 o'clock, and I think everybody's coming on, so we could probably get started here in a minute.
Okay, yeah, just let me, okay. I should see who else is there. Good morning, everyone. Thank you so much for joining the presentation today on utilizing ABLE accounts and special needs trusts to maximize benefits for your wards. The presentation will be recorded, and if you are interested in continuing ed credits, a certificate of attendance will be sent out to you within about a week of today for your credits. And guardians, as you know, we need your OPPG number. If we have not used it in the past, we would appreciate you providing that to us. And I'm very excited today that we have a guest speaker with us and to talk about ABLE accounts. John is going to talk about ABLE accounts for the first half of the presentation. We're going to take a few questions and answers, and I ask you to put those into the chat, please. And then I'll talk about special needs trust and really how they differ from ABLE accounts and how we use them together with ABLE accounts, which is really exciting for us. So with that, I would like to introduce John Finch to you. He is the director of ABLE United, which is Florida's ABLE program under the Florida Prepaid College Board. John joined Florida Prepaid in 2016 to assist with the launch of Florida ABLE, and he manages it now with its continued success. Previously, John had 10 years in the disability field with the ARC of Florida, helping to establish dental program statewide, and also, became chief operating officer. So John is our go-to person on ABLE, and I'm going to stop sharing my screen now and let John go ahead and start his presentation. Thank you, John, for joining us today.
Sharon and everybody, thank you so much for having me today. I look forward to talking to you all about ABLE accounts. And Sharon gave me permission to try something a little bit different this morning. I'm going to ask if you have heard about ABLE accounts before. So if you can, on your emoticon, little emotion box there, you can put a thumbs up if you have heard about ABLE accounts, or if you want to, you can put it in chat to say, yes, I know all about ABLE accounts. I would just be interested in seeing where we're starting at. So you do that, would be great. I see some thumbs up. Thank you, Carol. Thank you, Denise. That's awesome. Well, don't worry, you're all going to be experts by the end of this presentation. So we're going to talk about Florida's ABLE program, starting with how it all began. And it started back in 2014 when the Achieving a Better Life Experience Act passed that allowed states to create tax advantage savings and investment accounts for the disability population. Now, this is based on Section 529A of the Internal Revenue Code, and it allows individuals with specific and severe types of disabilities to save for health, independence, and just a better quality of life. It's similar to other financial products that currently exist, like a college savings plan, a Roth IRA, a special needs trust, all kind of rolled into this unique product. And as Sharon mentioned, here in the state of Florida, we passed legislation to put this program under the Florida Prepaid College Board, which has been around since the 80s and has helped over 1 million families save for higher education expenses. Now they're helping the disability population save for a variety of expenditures. High level, if there's any takeaway you have from today's presentations, really this slide is that there's some unique benefits of an ABLE account. The ownership is the individual with the disability actually owns the account, but somebody else can manage it on their behalf. It provides a lot of flexibility on how you can use it, but also doesn't count as a resource for Medicaid or SSI. And they can put their own money in, or family and friends can help as well, even trust, and we'll talk about that during Sharon's half. And then finally, the tax benefits. What's unique is that this program does offer investment as well as savings opportunities, which can grow tax-free. Now, I added this slide because we get this quite a bit when we talk is, oh yeah, the Able Trust or Able Trust accounts. And so I usually put a disclaimer saying we are not Able Trust. So Able Trust has been around for quite a while, and they are really focused on employment. They're a leader here in the state of Florida to have successful outcomes for Floridians with disabilities in becoming employed. But we are Able United, so we're savings and investment accounts. So it's tempting to say Able Trust accounts, but so we are Able accounts. And just high level, why this program exists and why I love what I do is, we're at the end of the day, we're really helping individuals save, and for many times the first time ever. And so, this program itself, as well as the Able Act in just generalities, was really spearheaded by this lady in the top left here. This is Jen Secor and her son Sean. Jen was an advocate that sat around the table with other advocates and parents and say, why isn't there a tool so I can start putting funds away for my child with a disability? And so she, after 10 years of legislative advocacy work, that finally became fruition in 2014. But it's gone beyond just helping families and children. You have these adults. So here's Alicia on the bottom. Her and her mom are using her Able account to save for a wheelchair accessible van. Then you also have Sandy and her son, Elliot, who Elliot is using the fund, his Able account, just as a place to invest, to have some fund money. But then he can tap into it to help pay for employment-related expenses for running his side business as a DJ. So it's pretty cool how individuals can use this account. So we're going to touch briefly on eligibility. Just to really, there's 3 requirements for Able and for anybody to have an Able account. It's important to note that an individual can only have one Able account nationwide, although each state can set up these programs, and there's different Fidelity, for example, offers Able accounts. An individual can only have one. And so here in Florida, since we are Able United, we are limited to Florida residents at the time they open or the time they apply. And the next 2 qualifications are true for all Able programs. One is they have to have a disability with onset prior to age 26. So that diagnosis had to take hold before then. And then it has to be severe. So either they're currently on SSI or SSDI benefits, or they have what they call marked and functional limitations. And they can self-certify that. And we usually get, what types of disabilities qualify. It's a question we often receive. We're fortunate that the IRS has provided some categories. So as you look through this list, some of these are the types of disabilities that you might be familiar with or work with your customers. So developmental disorders like autism spectrum disorder, you see psychiatric disorders, so PTSD, even severe ADHD, blindness, deafness, cerebral palsy, congenital anomalies like Down syndrome. But even there's other sections. So it's pretty broad on the types of disabilities, but it is severe enough that it's going to impact somebody's daily living and they're going to need assistance. So that's who's eligible, but who actually owns the account is unique. Typically, if we think of a special needs trust, it's usually a first party or a third party. This is unique in that the owner is the individual with the disability, but anybody can put money in it on their behalf. And also it can actually be opened and maintained by somebody else outside of the beneficiary. Historically, that's been really limited to legal guardian and power of attorney. But due to final regulations that dictate how Able accounts are to be run, that is now spread to include parent, spouse, sibling, grandparent, even all the way down to a representative payee through Social Security Administration, whether that be an individual or a entity, which has been huge because there's been a lot of individuals that we've helped that have been in group homes that didn't have really anybody else to assist them. And now that group home can actually set this account for them so they don't jeopardize their Medicaid or SSI benefits. We're going to dig into the public benefits. And as mentioned, if you do have questions during my presentation, feel free to go ahead and put it in the chat. We'll have a little bit of time before we move on to Sharon to answer those. We just want to make that as a reminder. So we're talking about public benefits, and what's unique, as I mentioned, ABLE accounts generally, the funds in them do not count as a resource for Medicaid benefits. So when we think of Medicaid, there's quite a few programs. The ones that my program most often touches are individuals on home and community-based waivers, such as the I-budget through the Agency for Persons with Disabilities, or even the long-term care, as that encompasses some individuals with spinal cord injuries. But generally, those programs limit how much somebody can have on hand as a resource, how much money they can have, and generally funds in the ABLE account are disregarded for that. So there was some concerns early on, and we have some sections at the end talking about, well, if the family's putting money in and the person passes away and they were on Medicaid, the state is going to take all that money, and that's generally not how it works. But we'll explain that in deeper detail here shortly. The other big benefit that people that we see who utilize an ABLE account might be receiving supplemental security income. That's that monthly cash need to help pay for basic living expenses like food, clothing, and shelter. There are some additional rules. I always encourage individuals, if you're working with somebody or know somebody that might utilize an ABLE account and is receiving SSI, to check out their online manual system called PALMS. They have a very robust on how Social Security is supposed to look and treat funds in an ABLE account or funds taken out of an ABLE account. The great thing is generally funds in or withdrawn from the ABLE account don't count towards that $2,000 resource limit. There is a cap on the first 100,000. Anything above that would count towards that resource limit. And then if it's used for housing expenses or non-qualified expenses withdrawn but not spent in the same month, count as a resource. I also put in here is earned or unearned income directly deposited to the ABLE account still counts as earnings. So you can't use an ABLE account to reduce your countable income. That's important to know. ABLE accounts shelter resources, they don't shelter income. But I want to just give you the example of using an ABLE account to pay for housing related expenses, since that is a huge win, right? Usually if a special needs trust pays for housing, it could reduce somebody's SSI benefits by a third. And so here you have a situation where somebody is using their ABLE account to pay for their housing directly. But in this situation, you should click the money out in May, holds on to through the end of the month and deposits in June. Well, that would count as a resource. It's called a housing related resource, and she retained it past the end of the month. So she would actually have her SSI benefits possibly reduced. So important thing to know, you can have the ABLE account pay those housing expenses directly or just withdraw and pay in the same month. So that's a great way to avoid reduction because of in-kind support and maintenance. I put this in here just as this for individuals that you might be all working with that are individuals receiving the I-budget waiver, the working people with disabilities language that passed. You can definitely check out ACA, and I believe this PowerPoint is made available to you all as well. But basically that allows people to earn more. So that can solve that issue for some individuals you might be all working with who are looking to become further employed or have greater income without impacting their I-budget waiver funds. And so definitely check that out because that solves that issue. All right, I know this is a ton of information. I'm just going to check real fast. I don't see any questions in yet. But if you do, please feel free to put those into the chat. We're going to talk about how this account actually works because this is unique. As this is an online enrollment process. So if you were, for example, setting up an online bank account, it's kind of similar in the types of questions you'll be asked: email address, date of birth, physical address. If this is being opened on behalf of somebody, their information as well, banking information, and a minimum $25 deposit to get started. Also, for example, if you were setting up a Roth IRA or something online, you would have to select the investment options, and the same goes for this program. And so we try to make this as streamlined as possible. There's 3 pre-designed portfolios. So if somebody is interested in a investment type product that's already pre-designed to kind of take out the risk, we have a conservative, moderate, and growth. But then individuals can actually have the option to create their own portfolio or strictly use it as a savings option. So you can see here we have money market funds, U.S. stock, U.S. bond that's managed by Vanguard, International, BlackRock. These are tied to very broad-based mutual funds. So they're very diversified already type of products. Both people have the flexibility and to invest as they see fit. Always encourage individuals to check out our performance on our website to see how funds are doing. But that's just, it's a really unique process, and you programming that people can actually invest if they have the funds to do that instead of just saving. So putting money into the account, all right, how does that work? Who can do it? Contributions are usually considered completed gifts, not income towards the individual with a disability. So for example, we see a lot of times special needs trust are funding able accounts, but family members can put money in their account. There are some limits, 16,000 per calendar year from all sources. So that's important to know. If somebody is working and not saving for retirement, they can actually contribute above that $16,000 limit. It's based on either how much they earn that year or $12,880, whatever's less, and that's based on the federal poverty line for a one-person household. So that's a unique feature for some individuals who are able to put some of their earnings aside and kind of use this as a retirement account. There's also an option to roll over 529 college savings funds from the individual themselves or from other family members. So a great way to do that. I also wanted to highlight our gifting page. So once an account is created, individuals have the opportunity to kind of set up a GoFundMe page that they can share. I have a couple friends that have done it, and it's a great success for to have family members say, instead of giving me, a sweater for Christmas because I live in Florida, you can actually put money into my Able account and do it online. So that's pretty cool. All right, we're wrapping up here, but I wanted to share my favorite section is the withdrawal section. I'm the spender in the family. And so once money is in the account, how does somebody get the money out? And so there's a few ways. One of the most popular ways is electronic ACH transfer back to a connected bank account. And so that could be the beneficiary's bank account. So a great way that they can do that and then start using their debit card. They can request a check online or over the phone. And we even have an optional Able Visa prepaid card. So even greater flexibility if somebody says, load it up with $500 and then you can use it anywhere Visa debit cards are accepted. Things to consider when a withdrawal is made that there are tax forms that will be issued, 5498 QA, as well as a 1099 QA. The 5498 just basically says, hey, this account has been established, here's how much is in it. And the 1099 QA will actually break down the total withdrawals and how much of that withdrawal was earnings. There's no need to file taxes as long as you use it for appropriate expenses. But always keep that documentation and receipts on withdrawals and what they were used for, which brings us to our next slide on what can these funds be used for in the account? What are you saving in an Able account for? And it's pretty broad. Even the Treasury said it's to be construed broadly, but it includes anything health related. So you could think of upcoming doctor's appointments, the dentist. It could be education, whether that be continuing education or assistive technology to help with that, housing, transportation, legal fees, financial management. And so we've heard of people actually using their Able account to set up a special needs trust. So it's a pretty broad, as you can see on there. And then even they put the caveat of other expenses as regulated by the Treasury, which I thought was funny. So as long as it can be justified that it's going to help improve or maintain that person's health, independence, or quality of life, then it is a qualified disability expense. So if you think of anything from a vacation to buying back to school clothing, shopping, or helping put a down payment on a home, all of those are qualified disability expenses. So is that too good to be true? What are the expenses? Generally, there are no fees associated with opening an account. We really want to make this the best value for Floridians. Our investment options do have a little bit investment administration fees tied to it. So that those usually come out net of the returns on the account. And then there's some optional fees for that Visa debit card or for paper statements. I added this section because I thought it was appropriate is we talk about the death of the beneficiary. As I mentioned earlier, what happens if somebody passes away and they were on Medicaid and what happens to their Able account. we passed laws to make sure that the Medicaid could not file a claim directly on the ABLE account. However, there is still Medicaid estate recovery. So if somebody is 55 and over, and some other stipulations, they may have that money from their estate taken out. So that's important to think about. There is final regulations that allow us to add a successor designated beneficiary, but it is limited to a sibling that also qualifies for an ABLE account. And they have to pay for outstanding qualified expenses as well if there's a Medicaid claim from another state, for example. So that's something to think about if you're working with somebody who may move out of Florida and move to another state and take Medicaid in that state. That state could potentially file a claim on their ABLE account here in Florida, because each state law varies a little bit different. So it's something to think about as it relates to Medicaid. But this is typically how the flow works when somebody passes away. Usually the account is frozen to prevent contribution to the account. But if somebody is overseeing the account, like an authorized legal representative, they'll be able to still continue to make outstanding payments, like maybe they had bills that were due or funeral burial expenses. If the account does not have one of these, what we call ALRs, authorized legal representatives, we have a death of beneficiary form that's available for download that can be filled out. And then what happens to the funds after all outstanding qualified disability expenses and there's no successor beneficiary, then we would make it payable to the estate. Or if there is a successor beneficiary and all those outstanding qualified expenses are paid, then we would roll that over to them. So I know it's a ton of information and you might have a lot more questions than we have time for, but if you do, visit our website, ableunited.com. We have customer service. You can book a one-off appointment on me as well under our contact us page on our website. And you can always call customer service for basic questions as well. And Sharon, I hope I wasn't too fast. I know that was a ton of information, but I thought it was a good amount, but I just wanted to stop this now and see if we have any questions.
So it looks like we do have a couple questions. Hold on, I'll pop my chat out real quick. And the first question was, can you clarify those earnings limits? It said it was around 4,600 for an individual, 9,500 for a couple.
Yeah, so the earnings limit has to deal with the working persons with disability language from Medicaid. And so I usually encourage people, if you just search for it on the website, I think that amount goes up every year. But for that is people on the iBudget waiver through Medicaid. And Sharon, I don't know if this is something you cover in your presentations or not, but it is $4,600 a month. And then for a couple, it's up to $92.52.
Yeah, so that's to qualify, like John said, to qualify for Medicaid if you're working and disabled and on the iBudget, I guess. Then instead of only allowing like $2,500 for some of the Medicaid programs, you can have more because you're working, right? So.
Great.
Good question.
It looks like we also had a question about does ABLE keep track of the amount of contributions so no more than 16,000 a year can be contributed?
Yes, the system's built in to prevent anybody from contributing more than that, even from a third party. So yeah, we'll receive anything up to that 16,000 limit, but once that's received, we'll send the money back to whoever contributed it.
Okay, that's good to know. And can you clarify the housing issue for an SSI recipient? Is it acceptable to transfer from ABLE to a checking to pay rent for the client?
Yes, so when it comes to SSI, the little bit trickiness is that they want to make sure that if it's a housing related expense, that it's expensed in the same month. So if someone does make a withdrawal, let's say, we take the money out now in September and we put it in our checking account, and as long as that money is out by the end of September, then it's not going to impact SSI. But if they take it out and say, okay, I want to pay my utility bill, I'm not going to pay it till August, that's or October, because we're in September. If I held that money past the end of the month, then it would count as a housing related expense and a resource at the beginning of October. So you can do that, but you can also just call customer service and go online and say, hey, just send the check directly to that housing related expense. So that way there's no issue and no worry about having SSI benefits reduced.
So
Great.
John, let me end as a follow-up to that. Can you have customer service like set up every month to pay your rent, or do you have to call them, or how does that work?
Yes, so I believe we finally introduced systematic withdrawals. I believe it's a form process still, so it's not something you could do online. You would have to actually call customer service to assist with that.
Okay.
And that appears to be all the ABLE questions we have in chat right now.
John, can you talk a little bit about the card that links up to the ABLE account for expenditures?
Yeah. So it's through a vendor you're probably familiar with, TrueLink Financial. So we're fortunate that our Vestwell is the name of the record keeping system that we use on the back end. So when somebody logs in, they might see a Vestwell logo, but they have a partnership with TrueLink Financial to offer that prepaid debit card. And so it is a reloadable debit card. So it's not like giving a debit card where you get the full access to all the money in somebody's ABLE account, right? We treat it a little bit different where you have to actually upload a certain amount of funds to that ABLE prepaid card. And then it just works similar to like a debit card would. You have a PIN, you can use it anywhere. Visa is accepted, whether, that could be online shopping, it could be at your gas station. And it's pretty flexible. There's limitations that who's ever overseeing that card, they can put on the account. So if they wanted to limit certain merchant categories, they can. I know, for example, you can't use it at a casino, I don't believe. Currently is a default setting. But yeah, it allows that flexibility. And we get a report. It's pretty cool to see, Sharon, how they're using it. And that's, believe it or not, the top places are online shopping, Amazon, Walmart, followed by restaurants. So we see a lot of like McDonald's, Taco Bell, local restaurants, which is pretty cool because there might have been a situation where somebody didn't have that freedom and flexibility to go out to eat every once in a while. Now they can with the ABLE prepaid card.
Right. And I know with the trust accounts, we use the TrueLink card also. We liken it to like a prepaid card because we have to make a distribution from the trust to fund the card, and then the individual can use the card. And it's actually in the Social Security Palms where they accept that, whereas they would not accept other types of prepaid cards as not counting, as a resource or income. So the card is really convenient though, because you can put restrictions on it. Yes. And that's really why Social Security doesn't count it, against the individual when it's funded. So. Yeah.
The one important thing I would say is when somebody does make that distribution from the ABLE account to the prepaid card, that does count as a distribution. So if it's going to be a housing related expense, I don't know if you could pay your rent with a Visa card, I don't know. But if it was a situation like that, that could get a little tricky. So as long as it's not housing, then it's, it shouldn't be an issue as long as you have a purpose for what those funds are going to be used for.
Right. Okay.
And we have, before Sharon gets started, we have one last quick question. John, do you have your ABLE presentation available in Spanish?
Yes, you can actually visit our YouTube landing page, youtube.com/ABLE United. And on there, we have a couple of webinars that are available in Spanish as well as American Sign Language. So definitely check that out. And we do have some printed collateral as well in Spanish. And we have a Spanish landing page. If you go to ableunited.com in the top Espanol, you'll see that. You can click on that, and that gives all of our Spanish resources.
Great. Okay. Well, thank you, John. And we will, as we go through the special needs trust portion, hopefully some of this will even sink in a little bit more and become a little bit more clear as to how we work together. Okay, so I'm now sharing my screen on the special needs trust information. At the end, we are going to do a comparison of the ABLE and special needs trust. And as I talk through, I'm also going to kind of compare the two types of accounts. So a special needs trust is a special type of an account for persons with disabilities that when you put money into the trust, it does not count for Medicaid purposes. So someone on SSI or Medicaid can, fund a special needs trust, and not the monies in the trust do not count for Medicaid purposes. And there's no waiting period or anything like that. It's not a gift. Distributions can be made from the special needs trust for things that supplement public benefit. So if a public benefit like Medicaid is going to pay for something, we're not going to pay for that out of the special needs trust. Obviously, why would you want to do that? You're just spending the money unnecessarily. In a special needs trust, you can hold cash, investments, etc., just like an ABLE account. However, you can also hold personal property or real property like a home or a condominium, something like that. Also, sometimes people have a life insurance policy, like a parent, and they want to name a special needs trust as the beneficiary of that life insurance policy when they die, to help fund money for their disabled loved one. And so special needs trust is a really good vehicle to do that. There are different types of trust. John alluded to the first party and the third party types of trust. A first party trust is where the disabled individual's money is going into the trust. A third party trust is where somebody else's money is going into the trust. So a parent, a grandparent, etc., can put money into a third party trust for an individual with disabilities. The main difference between the first and the third party is what happens at the end when the beneficiary passes away. In a third party trust, where mom or grandma has put money in, there's no Medicaid payback at all when the beneficiary dies. The trust says when disabled Johnny passes away, it's going to go to his 3 siblings, okay, if there's anything left. No Medicaid payback. In a first party trust, before any money goes to heirs, the requirement is that Medicaid gets paid back. So big difference. And if you note, in an ABLE account, both the beneficiary and other people can fund it. Okay, so that's one of the things that is, when you're talking large amounts of money, really someone like, an elder law attorney that's helping you with the planning can really help think through what is the best vehicle. So very often the ABLE and the trust are worked to work together in conjunction, because the amount of money that can go in, remember, only 16,000 can go into an ABLE account every year. In a trust, there's no limitations on amounts that can go in generally. There's limitations on the types of trusts, like in a qualified income trust, you can only put income into it. In a third party trust, you're only putting assets into. So there's different rules. The whole, and we'll talk a little bit more about the fact that you can use a first party trust to reduce your countable income for Medicaid purposes. Not possible in an ABLE account. You're not reducing income, you're only reducing your assets. Okay. So I'm going to go on, and I do have presentations on our website that you can review on the different types of trust and all. That it's actually on our website if you want to listen to a 1 hour on all the different types of trust. So in a special needs trust, we help a variety of people as long as they meet the definition of being disabled, which is the Social Security definition, unable to work in substantial gainful employment. For a young person under 18, you've got slightly different functional, disabilities. But note here, there's no age limit on when the disability had to start. So in the able, the onset of the disability is before the age of 26, right? And a special needs trust, it can be any age. So that's one of the big differences. So we can help young people, we can help older people in the special needs trust. Special needs trusts can really are great to help people qualify for all these different types of Medicaid programs. This is your Medicaid for your aged and disabled individuals. We're not talking about family Medicaid, your SSI and Medicaid, QMB, a lot of medical Medicaid, and then your long-term care programs also, whether you're over the income limit or the asset limit. A trust can be used to qualify for these different programs. A lot of you know about QMB. If you've worked with aged before, we have a lot of our beneficiaries on this program. It is a wonderful medical Medicaid program for people that are also on Medicare. So you've got Medicare as your primary, and Medicaid now comes in and picks up as your supplement, reduces the cost of your medications, pays all your co-pays when you go to the doctors and the hospitals, pays your Social Security Part B premium, your Medicare Part B premium for you. And also it's really a great program to get the medical care that you need if you can't afford it. There's low income limits, $1,133 a month in monthly income, and $8,400 in countable assets. So we help a lot of people in a trust to reduce their countable income for this program, whereas you cannot do that with an ABLE account. So you've got a lot of persons with disabilities on SSDI. They may be making $1,800 a month, and they need Medicaid to supplement their Medicare. A special needs trust can be used in that situation.
Sharon, that's a good, this came up to me recently, right? Because I'm not too familiar with the QMB. So in a situation, as you mentioned, somebody receiving SSDI benefits would actually put those funds into a special needs trust so they can reduce their income. Is that correct?
That's correct. And you have to make
Okay.
sure it's the right type of trust. A pooled trust can be used for that. A D4A, you have to be under 65, right? So, but yes, a pooled trust definitely can be used for that. The Social Security disability continues to go into their checking account, and then they just transfer, the overage or more into the trust to reduce countable income.
Oh, that's great.
Yeah. So we have Lewis here, who's 45 years old, cerebral palsy from birth, and his parents passed away about 6 months ago and left $200,000 and a home to Lewis. So Lewis is now collecting SSDI, a small amount of SSDI based on a childhood disability benefit. So that's a benefit based on his parents' working record, but it wasn't very much. So he's also collecting SSI to bring him up to the total $841. So he's only got $200 of SSI, $641 of SSDI. He has medical benefits. He's on the Med Waiver program through iBudget, food stamps, etc. He will get Medicare after 24 months because of his SSDI. Now starting collecting after the parents passed. Lewis has a guardian appointed for him. So SSI, you have to keep your assets below $2,000. He's getting $200,000. How can we protect his SSI and his Medicaid? Okay. The ABLE account, remember, only can put $16,000 in each year. So a pooled special needs trust is one option for Lewis to put that $200,000 into to keep his benefits. Again, he meets the definition of being disabled in order to use the trust. There are about 10, 12 or so trustees of pooled trusts throughout the state of Florida. Aged is one. You have to be a nonprofit in order to do that. Now, the things that we can pay out of the trust, as long as it's for Lewis's sole benefit, we can pay for, but he's on SSI. So there are restrictions for things that can be paid out of the trust because of his SSI and because it could potentially reduce his SSI benefit. At death in a pooled trust, the trust, if Lewis wants to name heirs, he can, but Medicaid has to be paid back first. Or if Lewis had wanted the nonprofit organization to retain all the money, that's possible. At Aged, we do something kind of similar to what the ABLE account now allows individuals to do, whereby we can set up another pooled trust account for a disabled individual with the money. So if Lewis left 100% to Aged and said, I have a disabled sister that I would like you to set up an account for with any monies, left over when I pass, we can do that in accordance with all the rules and stuff. We're allowed to do that and set up another trust for a disabled individual. One of the differences is it does not have to be a sibling. It can be anybody that meets the Social Security definition of being disabled.
Wow, that's great, Sharon. And I would like to kind of add a couple comments to that slide, if you don't mind.
Yep.
So what's unique and what we've seen in this example for Lewis is that, he sets out that pooled special needs trust, and then he could fund part of it is ABLE account, kind of as his fund money, but then also to pay for stuff that he can't pay with the pooled special needs trust. For example, maybe he wants to eat something a little bit nicer than what SSI allows him to, or he wants to go to a fancy meal every once in a while. But he can put that money into an ABLE account and then do that, and then that reduce that SSI benefit. So we see a lot of times where people not using the ABLE account for long-term savings, but almost as a place where it's kind of that intermediate savings checking account where they have some additional benefits of protection for Medicaid and SSI, not counting as a resource, but then also to pay for those housing or food related expenses.
That's absolutely right. These are just some examples of things, again, that we pay from the trust. And this is a slide on kind of how the trust works when we talked about the SSDI going into somebody's bank account and the overage going into the trust to qualify for the QMB, and then we can pay someone's, rent, mortgage, etc., as long as they're not on SSI. So this is a kind of a visual on how a trust works. And again, assets could go into the trust too. Now we're going to touch on what John mentioned. And this is the household costs. The trust distributions for food or shelter are considered household costs, otherwise known as in-kind support and maintenance. And the government doesn't like that. They say the SSI is supposed to cover food and shelter expenses. So they're going to reduce the SSI benefit by up to 1/3. Right now, it's $300 under the presumed maximum rules. If the SSI is eliminated, you'll lose Medicaid. Now, most people that are on SSI are getting $841. But if you remember in Lewis's example, he's only getting 200 SSI. So if we make a payment for one of these household costs for Lewis out of the trust, it's going to completely eliminate his SSI, which means it eliminates his Medicaid. So in these types of cases, we have to be really, really careful with what we pay out of the trust. Anything, mortgage, property taxes. So I have used ABLE accounts for individuals that have no mortgage, but they have a property tax. Parent left them a home and they have to pay that tax. Well, they haven't, they don't have money. So they open an ABLE if they were disabled prior to the age of 26, right? And we transfer the money to the ABLE. Now they can pay their property taxes out of the ABLE account. In Lewis's case, we're going to pay his mortgage. Well, if we pay his mortgage from the trust, he reports that to Social Security and they're technically going to eliminate his SSI. So what we do is we have Lewis set up a ABLE account. We transfer funds to his ABLE account and he pays his mortgage directly from the ABLE account every month. Okay. So we can do like a $16,000 distribution over to ABLE. We could do a monthly distribution. It just depends on, how we want to set it up. Now, John alluded to this. If you're transferring funds from ABLE into your checking account, you need to pay that mortgage by the end of the month. If not, it's counted as a resource, which means it counts towards that $2,000 limit. Okay. So here's a slide that kind of captures some of these differences that we've talked about. Housing expenses, if paid from special needs trust, can reduce or eliminate SSI. If paid from the ABLE, it's not going to affect your SSI if used within the same month. So we can make the distributions from the trust to the ABLE for housing expenses. We can also distribute funds to an ABLE for other things, just to increase their independence, like John was talking about, to give them more money to buy food, on their, maybe they have the TrueLink card, attached to the ABLE, and they fund that, and they want to buy food, things from Amazon, those things that all are allowed under the ABLE account. So the ABLE is wonderful because, it gives them more independence instead of having to come to the trustee to ask for every single, payment for things. Let's say they need to purchase a cell phone or a television or something like that. We can do that out of a trust. But if they had funds in an ABLE, they could also pay for those types of things. You also have to consider fees. One of the differences, ABLE account, very minimal fees, if any. Trustee, of course, is going to have trustee fees. Management is something that is should be thought about also. Who is going to be able to manage that ABLE account? Is there someone that can assist the beneficiary if they need assistance? Or do they need more of a professional trustee? Sometimes money is put in trust just to help with the management of the money, to make sure it's used appropriately. And again, upon death, there are differences with what happens to the funds in the ABLE. With the ABLE, like John said, the money goes generally into their estate, and there may be a Medicaid recovery in the estate. Now there's an option to set up funds, I guess, another ABLE account for a disabled sibling. So in the trust, of course, the first party trust, I've talked about that, what happens upon death. But in a third party trust, remember, there's no Medicaid recovery at all. So again, these two types of vehicles really work very well hand in hand. If you've just got a small amount of money and you have a disability prior to the age of 26 and you want to save up a little bit, or you're working and you want to put that income in for savings, fantastic. but larger amounts of money, a trust may work better and work together with an ABLE account. So this is a great chart for you. Talk about, all the differences in a snapshot there. There is a $418,000 limit in the ABLE right now. Nobody's met that limit yet because haven't been in existence long enough with that $16,000 limit every year. You do lose your SSI payment when you reach 100,000 in an ABLE, but you still get to keep your Medicaid. So these are some of the, this is a great chart for you. If we don't have your OPPG number, please send them to us. And here's your contact information once again for myself, a senior trust advisor with AGID. I kind of forgot to introduce myself, I guess. I'm sorry. And, we live and breathe Medicaid and special needs trust here at AGID. We're happy to, be a resource for you. And I know John said there's a live chat available. You can even set up one with him by going to the website, which is really awesome. So I'm going to stop sharing the screen here and we'll go to the chat and see what's in the chat here. Let's see.
So far, there's nothing new, but if you guys want to add anything to the chat, feel free. If you guys have any questions about ABLE or about special needs trusts.
I want to make some additional comments, Sharon, if
Please.
you allow. So I think what's great is that you can have both, right? It's not ABLE account or a special needs trust or a full trust. It's, hopefully explain some of the benefits. I think of, when you think of a special needs trust, a lot of times that's that kind of long-term planning almost, or estate planning where, if you're in a situation, family has a life insurance policy or wants to leave all their assets to an individual, if not without impacting their Medicaid or SSI benefits, really that is the special needs trust. An ABLE account, I have seen a couple of instances where, someone submitted $100,000 life insurance, grandparent passed away, all they had was an ABLE account, and so it's like we contribute 16,000, then we're sending it back to that individual, and it can negatively impact them. So, but I see a lot of times they do work friendly together, and just, what the purpose of the ABLE account is, right? I see that 418,000 limit, I don't know, personally, if it was me, I don't know if I would want to reach that amount. Really, it's, what's the goal of the ABLE account and what people are using it for? If it's going to be a long-term savings tool, but ultimately having a purpose for it and hopefully putting down a down payment on a home, which is always a great thing to do.
Right. Cindy says, I'm so excited about being able to use both trusts and get around the, ABLE account and trust to get around the SSI mess. Yeah.
Yeah, I can't speak too much about the other SSI POMS issues, but they've done a great job with ABLE clarifying some things that we've asked for. I know when we first launched, there was confusion on what about food? Does food impact SSI? But they clarified that food is not. It doesn't count when it comes to using your ABLE account for food. So I thought that was great. And then they also clarified about the types of trust that can fund ABLE accounts. And at first we thought it was just third party, but now it's clear it's any trust. So whether that be first party or third party. So yeah, hopefully that does help clarify some of that SSI, more confusion than mess, I think.
Anybody else have questions or comments? Well, we really thank everybody for joining us today. I hope that you have learned a lot, and the presentation will be available to you. Julie will be sending a link, and we do actually post these to our website also, and John has given us permission to post his materials also. So we'll kind of do a combination posting for you. And don't hesitate to reach out to myself or John. I know when I have able questions, I reach out to John and he's always able to answer them for me. So thank you very much. And we look forward to having you on another one of our monthly webinars. Stay tuned for our emails on the upcoming webinars. Thank you.
Thank you, everybody.
John, thank you again.
Thank you, Sharon. I appreciate it.
Uh-huh.